Hey, this is Sasha. Thanks for joining me in today's video, and I want to share with you some insights as for how to spread out your money and allocate your money when trading options. So I deal and talk a lot about this topic when it comes to working together with people. When I work with them for like 3 months, 6 months at a time, we talk a lot about portfolio construction, what makes sense for them. It's kind of like creating a matchmaker for you, right? Some people like golf, some people like tennis, some people like badminton. So whatever your sport is, it's fine. And same thing with food. You know, some people like burgers, some people are vegetarians. So again, trying to find a match for you. And this is what happens when you come to a portfolio construction. Now you start with a root base, right? Like food itself in general is food. It's something you eat. So the same thing here. We look at diversifying and spreading your money out, but how do you do that based on the strategies that you have, the strategies that you know, the risks that you're willing to put on? We talk a lot about that in a mentoring program in detail. So as we go into doing the trades as well. Now, I'll share with you some slides from this that I typically go over, and you can get some perspective on how it may apply for you. Again, this is a starting point, and then what I'm going to do is I'm going to show you a triangle concept, and then what we'll do is we'll go into like a pie shape here in just a second. But the basic breakdown is you might have a few different things in your portfolio, such as speculative trades. You might have some medium-term trades and long-term portfolio. Again, this is just a starting point to build a foundation and give you some thought process to get those juices going in your brain. And then you could expand it here in a little bit. So with a long portfolio, what we're trying to do is really just like a long investor. You're trying to make money from delta usually. So positive delta, things go up. This is what most people do is just, hey, I buy a stock, I hold it, and it continues to run up. So again, you're trying to make money from appreciation or an upside move. Medium portfolio is theta. You don't have this when you're buying stock, but when you deal with options, you can create trades like, let's say, non-directional, like an iron condor, and then with time decay, that trade continues to make money and premium. It could be things like a calendar, that kind of stuff. And then speculative trades, kind of like your ideas, your opinion, your thoughts. You know, you could do hedging strategies in here. You could do penny stocks. There could be a lot of different segments to it. Now you see I started with a big base, so that usually means the amount of capital that's also allocated in different spots. So you probably have the smallest amount of capital here in speculative and probably the most amount over in long portfolio because, you know, you've got a big chunk of your nest egg here in general trades that have kind of a lower amount of risk. So when you look at the risk side of it, the lowest risk is the long portfolio. The highest risk is kind of speculative because it's kind of usually quicker trades, a little more directional maybe, not as consistent. It's just like a one-off strategy here or there. So here's kind of the strategies in general, long portfolio. You could do a lot of different things. I'm not a huge fan of leaps, but let's say anything bullish right here could be collars, covered rights, leaps, long stock, vertical spreads, long calendars, diagonals, bullish iron condors, broken wing butterflies. Medium term trades, this is theta trades. This is more non-directional trades. So these would be like calendar spreads, iron condors, butterflies, double calendars, and double diagonals. And speculative is pretty much anything you want. It could be shorter term. It could be earnings, big events. You could do things with more technical analysis, that type of stuff. So how do you allocate this? Well, from a baseline, let's just start. Hey, here's a baseline here that we've got. Well, with a baseline, we might just say, hey, let's put 50% in a long portfolio. And then in a medium portfolio, we'll put about 30% of our capital and 5% in specs. So where's the rest of it? Well, you'll probably have some more in cash. If you have different market conditions, so here's kind of like all-time highs versus all-time lows. All-time highs, you probably put less in long portfolio, right? This is where you make money from appreciation. Whereas all-time lows, you might put a little more because you're looking for those stocks to snap up to that upside. So that's kind of what you're looking for there. Okay. And from a $10,000 perspective, long portfolio, maybe $3,000 in all-time highs, maybe $6,000 all-time lows. And then the rest you kind of separate based on what you're comfortable with and what you like to do and so on. Okay. And where does the money really come from? So here's what makes you money. Delta here or upside movement, here theta or time. Okay, and this is kind of your ideas. It could be more Vegas strategies. It could be hedging. It could be penny stocks. Now, I'll show you another portfolio overview. This is kind of a pie shape. Some people like looking at it from a pie view. Other people like looking at it more on a strategy basis. So here's another version of that. So you might say, hey, I'll do a little bit of long portfolio diagonals, some non-directional iron condors. I'll do some non-directional calendars, non-directional double diagonals, long portfolio verticals. So that's your long portfolio right here. So you can see there's that big chunk. And then the non-directional here, okay? And then the other parts right here is more speculative. It could be little spots here from 0 DTE trades or day trades or speculative penny stock trades. So they're all mixed in. So depending on how you like looking at a portfolio, you could use a pie shape here or a pizza shape, or you could go ahead and do a triangle base. It's really just a matter of visual of what you prefer. But overall, this is how you might start looking at structuring a portfolio when it comes to trading, investing, looking at your option trades and that kind of thing. So I hope that helps. I definitely encourage you to check out the coaching program if you're struggling with figuring out, what kind of portfolio works for you and makes sense. If you want to discuss some things, you can just book one single session. But if you want to work together on a longer term basis for like 3 to 6 months at a time, definitely take a look at that. And there's also a lot of great courses there that we have. If you want to look at just courses and do your own self-study thing, totally okay. Anyway, thanks for joining me. Truly appreciate it. Hope you have a great rest of the week ahead, and I will see you maybe in the next video. Take care.